SPX slipped negative 0.1% as earnings season could finally give the stock market some good news. Here's what's ahead. Lifted semiconductors and consumer discretionary. Welcome to your daily market briefing for 2026-04-10. The broad market traded with a mixed tone as SPX closed negative 0.11% and NDX finished plus negative 0.14%. Leadership came from XLK, XLY, while pressure showed up in IGV, XLV. Here is the broad market snapshot. S&P 500 down 0.11%, Nasdaq 100 up 0.14%, Dow Jones down 0.56%. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were technology plus 0.39%, consumer discretionary plus 0.13%. Laggards were software minus 2.57%, healthcare minus 1.35%. Across global markets, the session leaned risk-off globally, with broad market retreat across regions. Asia was under the most pressure, with Japan and Shanghai leading the retreat, while Europe held up better than the rest. Stepping back, the broad market traded with a mixed tone, as SPX closed negative 0.11% and NDX finished plus 0.14%. Leadership came from XLK, XLY, while pressure showed up in IGV, XLV. The stock market fear and greed index is 25, which sits in fear. That points to a cautious tape where traders still want confirmation before adding risk. On the S&P 500 heat map, leaders were semiconductors plus 2.10%, consumer discretionary plus 0.13%, laggards were software negative 2.57%, healthcare negative 1.35%. Fed thinking is still central to the tape, and releases like upcoming macro releases are being used to reprice the policy path. Firmer data would make it harder for the market to lean into quick easing hopes. Commodity action was split. Gold led, while Brent lagged, so the move looks selective rather than broad-based. The index board leaned lower, with Nikkei carrying the weakest tone, and Nasdaq holding up best. Mega-cap curves were mostly positive, which points to a broad tone move more than a single-name story. Forex showed a risk-on currency tone, with the sharpest move in AUD-USD and the best relative strength in EUR-USD. Crypto remained constructive, which helps confirm the broader market risk tone. Bond curves suggest yields were mostly rising, so rates still mattered for the session. The main focus stayed on leadership stayed concentrated in semiconductors and consumer discretionary. The pressure point remained software and healthcare. Tomorrow's setup comes down to the next macro events, yield direction, and whether today's leadership can hold. Follow-through on earnings season could finally give the stock market some good news. Here's what's ahead. CNBC also matters because the tape is still sensitive to macro headlines. That is the key takeaway for today's market. The broad market traded with a mixed tone, as SPX closed negative 0.11% and NDX finished plus 0.14%. Leadership came from XLK, XLY, while pressure showed up in IGV, XLV. Keep watching policy signals, index leadership, and the next macro catalysts. Subscribe for the next daily market briefing.